Welcome to the Commercial Real Estate Podcast powered by First National. I am Adam Pawadic, sitting here with Aaron Cameron at the Real Capital Conference 2023. It's the first conference of the year, start of a long season, which we will be a large part of.
The hum is great, right?
Yeah, you can feel the energy. This is in between sessions, so you'll hear a little background noise, although I'm sure they'll be back in soon. But I think that the background noise is part of the fun of doing it at the
exactly.
forums.
Better than sitting in my basement, I'll tell you that.
We're sitting here with Peter Senst of CBRE. He has been on once before, and he's also one of those guests that most people likely know his name. But we will welcome him back to the podcast. Welcome, Peter.
Very nice to be here, and that was a great start to the day, our breakfast we just held. So I like the message, and it feels somewhat positive today.
Yeah, that was the takeaway was positivity, and I hope everybody's right on that note. But
the funny is I had the same experience, Peter, and there's less uncertainty in the market today than there was. There's still lots of uncertainty, but if you rewind 12 months ago, you didn't know if inflation was going to 15%. You didn't know if interest rates were going to, you had no idea what was going to happen. At least now we feel like, okay, I know what the band of up and the floor and the ceiling look like going forwards.
I don't remember a year where you don't start with, oh my gosh, there's a lot of things to be worried about. There's a lot of challenges. Like every year is the same. Our job is just figure out how to get from A to B to C. And we somehow do that as an industry.
Well, maybe let's talk about that. Peter has been on before, so if anyone wants to do a deep dive in his background, the link to his previous episode will be there. But just real quick, I know who you are, Peter. As you mentioned before we hit record that you're 30 years in the business. Was there a year of just placid calm with nothing on the horizon you had to pay attention to? But maybe just who you are and kind of cover the 30 years.
Sure. Well,
in 30 seconds. 30 years and 30 seconds.
So the funny thing is the only years that look calm are the ones when you look back. When you look back, you kind of go, okay, we figured it out. We got it done. Nothing going forward ever looks easy. And this is now maybe 32 or 33 years at CBRE, where I've had the honor of working at the company. And it's the biggest service company of its type in the world. It's a Fortune 100 firm. Last time I checked, it was a Fortune 132. We own these incredible principal business lines. We've got really smart, capable people just helping to make real estate decision-making better and easier. So, I don't know, it's been more than $125 billion of trades that I've been a part of now. And, I get to work with some great people all the time. Our team is great. The clients are great. I just consider it a privilege every day I get to go to work.
And how long have you been there for?
32, 33 years and that kind of thing.
And how big's your team now?
27 people. And then there's research and there's the other office, everything else. So I just think I've got the biggest dashboard in the industry when I could see every asset class, every geography, not just Canada, but around the world. It just gives me intelligence that no one else has.
You can't replicate.
Yeah.
I'm going to pivot a little bit, and we're going to talk about transactions. But, last time you were on, we didn't really get into it about, the way I can put it is sort of sales philosophy. You are a salesperson. You are out there to sell. You don't see yourself that way. You can kind of nodding
investment
your head back.
advisor.
And I think that's kind of where I want to go is what is the approach? What is the general philosophy to get in front of your clients, to empower your teammates? What does that look like?
I really see my role as more of a chair of the board, and I'm there to help the CEO make a decision. So we go through all the thinking, the what ifs, the plan Bs, and it's never to really sell. It's to say, look, what's the right decision? How do we make the best decision we can? And that's what people count on us for, is just sort of thinking through all the potential problems. Because the worst thing you can have today when the markets are like they are is to make a mistake. And we're there to make sure that we don't make mistakes, and the best outcome possible we can deliver on.
Remove uncertainties.
That's our job, and it's not selling. It's.
I will note that Peter doesn't say I or me at all. It's always we and us. Why is that?
It's really, when you understand what we have, it is all about we. It's a much bigger picture and story. So I think about it, whether it's the teams, the platform, just this whole global approach. It is a big we. And I see the clients, when you talk about selling, again, it's a partnership with them to make the right decision. So we're all in it together to a degree.
And to that point, the idea that the best decision might not be a sale for you is how you become more of an advisor than just a door-to-door salesman.
No is a powerful statement, right?
The worst thing we can do is take something out that doesn't work. So if we create a plane that won't fly, or even worse, crashes, like that's not a good outcome. So we don't want to go there. Embarrassing clients or letting them sort of walk into a wall in the dark, it's not what we do.
Can I pull on that string a little bit? How do you convey that value? What is the process? It's not easy. You don't just put a slideshow up and say, here's what I do for you. I'm your partner. It comes across as, very shallow. How do you go into that level of getting the clients to appreciate that you truly are just there as a partnership?
The 32 or 33 years of getting to know each other, it's just it's an understanding that we all have that we're here. Our success is kind of linked. We're helping kind of each other in that sense. So we just, over the years, we've said no, or we've said, watch out for this, don't do this, or do this. You learn that it's
developing trust.
It's really what it comes down to.
You mentioned, trying to help avoid making mistakes. But if you made a mistake in real estate in 2017, it probably got paved over by pretty good tailwinds. The mistakes then just inhibited your potential return. But making mistakes in the current market a little more treacherous. So maybe we can start off with where we are in the market today, just for a timestamp. I think we are February 28th or 28th.
It's not the 29th.
Not the 29th yet.
Yeah.
So just a quick kind of 30,000 foot view of where we are as an investment community.
So we just closed.
You only have about 3 minutes.
We just closed one of the biggest deals in Canadian history on Friday of last week. So the Summit REIT deal. So when you really look at the raw numbers, you had in 2022 that was 58 billion in trading, and we thought 2021 was going to be the record of all records, and that was just 59. So Canada was down 2%. So we come into the year. We've got a 1 million foot office deal firm getting ready to close next month. We've got lots of retail. We just closed Erin Mills Town Center. A lot of industrial coming out. We've got some big land under contract. So it's not all perfect, but if you compare this to what's going on globally, 1.4 trillion traded in 2021. Then it dropped to 1.1. So that's a 20% reduction. Canada down 2, the world down 20. That discomfort, it's there, and the debt markets in the U.S. are a challenge. In Europe, there's a very tough war going on, geopolitical tensions in Asia. When you look at real estate through our global lens, Canada's one of the absolute shining stars because of all the things we're able to do. And if you're not having exposure to Canada through real estate, you want it now like never before.
And then I got to go straight to that foreign buyers restriction, the legislation that was announced in December and enacted in January. How has that impacted your business?
It's going to be a little bit tricky, but I think they're going to redefine it.
Let's be fair. It was unintended consequences, but we have heard now, for anyone that's not familiar, there's a foreign buyers restriction. Couldn't have more than 3% ownership to buy land that may be used for residential purposes, which ultimately captures condos and apartments, if that's my understanding. So all of a sudden, basically, if you're a European or Asian or American and you have 3% ownership, you no longer can acquire land. Are you feeling that that's having an impact, that people are concerned about it, even though it probably will pivot at some point?
Yeah.
But
we're talking about it more than the reality of it having an impact. But we're even saying that this time last year, we closed Royal Bank Plaza. That could have got caught up in it because it was Spanish capital coming in to do that. So, we'll figure it out. We'll get through it.
It's frustrating more than anything.
It's more just concerning, right? But smart decisions will be made around this. We'll get through that.
Well, especially they do redefine it, because that was not the intended consequence. It was not. They didn't have large investors looking to put billions into the country.
For our industry, I'll say that Michael Brooks at Real PAC is working very hard to lobby all of the interested parties.
He's so good at that.
He's so good. So our collective interests are being put forward very actively, but it's just going to take time.
That's all it is.
Yeah.
For the deal junkies in the crowd, can we talk about some details on the Summit deal? Buyer, seller, size, how much work went into it from your team? I imagine that must have been a mountain to climb.
Well, it's this is where the global platform really plays an important role. So I spent a lot of time in the summer with GIC in Singapore. Then they asked me to go to New York, so we spent time there as well. When we came back from that trip, the whole idea was, once upon a time, they were actually an investor in Blackstone They wanted to have a deal when we did the take private of Pure Industrial. They wanted something similar themselves. So this has been in the making for a long time. This was a significant deal. So Summit REIT selling to GIC and Dream. So Dream played a really important role in this one as well. But Michael Cooper and I, we flew down. We had a lunch and a serious meeting with Paul Dykman in Bermuda on the Monday of Labor Day. We effectively cut a deal and the broad framework of the deal over a long lunch. We came back and we all put the effort into it. That ended up being a $5.9 billion deal that just closed on Friday. So hats off to GIC, Summit, and Dream.
And how many assets, total square footage, any of those types of details?
It's
a lot.
I'll tell you, it was really $240 to $250 a foot. This would be something where yields would have been in the threes, which surprised a lot of people at a time like this. So, again, in terms of scale, size, probably the second biggest ever done in Canada.
Upside in rents, presumably.
That's the big story. Yep.
Very 1980s style to put together a whole deal over lunch. It's I like it.
There was no paperwork.
Yeah,
it was just a handshake.
Yeah. So then maybe we'll use that as a jumping in point to industrial. Are you a big believer in the you can kind of pay for tomorrow's rent today concept in industrial?
Mm-hmm. I mean, vacancy is still so tight in Toronto, Vancouver. We had the lowest vacancy rates in North America. It's so rock solid. What we're not going to look for going forward is that parabolic growth. So we're just sort of bringing that down a little bit. So it's still a very healthy market, but just more of like a 7, 8, 9, 10, 11% rent growth. It just depends on where and what. So it'll be a little bit more manageable for tenants. So, still very healthy. You still want to be a big participant in it. And as you reallocate capital, as you take your portfolio and want to change it, there's still a lot of groups that don't have industrial or don't have enough. Watch for them to be coming into the market this year. So we'll do some big things before long.
There was a wild stat. I can't remember if it was Paul Morisuti or Benjamin Tall that had it up there, but it was that for every dollar saved in transportation costs for some of the the transportation logistics tenants, it's a 14 times multiple in amount of dollars they can spend on rent.
Yep.
So you just and this has always been part of the story, that how much can the tenants absorb. The reality is, in the grand scheme of their balance sheets, the cost of renting and the lease payments is a very small amount of their expenses.
Agreed. And if you even think about it differently, if you want to be a best-in-class 3PL, you can't do that out of a 15-year-old or 20-year-old building. The modern spec gives you so much more efficiency. So when you think it through that way, it's like going to race a car and you got a 15-year-old car. It's just not going to go as fast as a current car.
What's 3PL stand for?
Think about it as the trucking, logistics, that whole side of the business.
Okay, perfect. Yeah. I'm just trying to keep up with the terminology. I throw them out too, and then I'm going, I better make sure everyone understands.
It's an acronym, rich business. Yes.
Yeah.
Can we talk about the return of institutional money? Everybody's talking about, since the beginning of the year, everybody's coming back in the spring. Spring, we're going to see it. Spring, we're going to see it. I don't know if that's just a knee-jerk reaction to the housing market. Everybody's saying that it's going to come back in the spring. But the idea is we're going to see a lot of participants coming back shortly to the market that were not there last year. Do you think that's true? And, what's driving that?
So much is going to depend on how the cards get played. And depending on what comes to us, as a broader economy, that'll dictate people's moves. But if you're in the camp where you want to put money out now, you're thinking that inflation comes down, bonds come down, great time to buy, try and buy all cash, refinance later at lower rates. So you're really having an arb at this time if it all plays out according to plan. And Benjamin Tall, you just heard him, some great points on things probably getting better, that things are maybe a little bit better than we're all thinking. I'm in that camp. I see a lot of opportunity, and it's the really smart people making moves today. If you understand your business, if you understand the industry, you'll make the bet today thinking you'll have outsized returns. A lot of groups do sit on the sidelines. They want sort of clear skies. They want it easier to make decisions, but I never find it black and white. It's always gray. So you got to make decisions. The background's going to be challenging, but right now the really smart people are doing some great things.
And I like that it's a finance play. That bodes well for Aaron and myself.
Yes.
How do you stay ahead of the curve, Peter? You've been 33 years at this. You're still the leader in your industry. you're battling complacency probably every day. What does that look like for you, just to make sure you're always thinking about it differently, looking at it differently, staying ahead of the trends? Like, what's the motivation?
Really, the mantra for us is every day is another step. So there's never a top, and so you're always trying to get ahead. So that's learning, that's building. It's really helping and figuring out how we can do more to deliver on client goals and needs. So as a firm, we're constantly buying companies. We're an M&A machine. We're trying to evolve our platform where we've got more services to be able to give. So really, this is a market about balance sheet, and we just happen to have an incredible balance sheet, virtually no debt. So you've got this big machine. I don't want to get into revenues, everything else, but it's a really big company with no debt. So there's a lot of things that we get excited about at a time like this, because again, to be able to provide better services, this is a time where we can do things differently.
I will announce this, but you're not allowed to make any comments on it, that you just got your CMHC approved lender status, and you have a growing lending platform at CBRE.
Yep. It's something where, again, we're always trying to do things a little bit differently.
It's, you know what, don't bother. It's just, you don't need to get into that space, guys. Don't worry, we've got it covered, Peter. No, I know, but that's to your point, right? You've got now another opportunity, another value to your clients, saying I can acquire certificates, I can help you with that side of the acquisition.
Another big piece of news that we had not that long ago is we bought roughly a 50% interest in Turner Townsend, so the big ESG company and consultant. So when you're a major tenant or an investor and you want access to our ideas around ESG, there's nobody better than Turner Townsend. So that's a major acquisition that we put in. So you've got the largest development company in North America, Trammell Crow, CBRE Global Investors. We'd have 175 billion under management. I mean, there's so many parts of the company where there's learning that we can share to help decisions in real estate just become easier and better.
Is ESG impacting valuations?
It is
in Canada, globally. Maybe make the comparison.
Pick up more. So in Europe, before you even look at sort of the status of the offering, you want to know the ESG levels. That's coming to Canada. So it's going to be led by you on the lending side, and that's going to be something that we're feeling more and more. Because if you buy a building that's not having a LEED status, you can then have to think about, in the next 5 years, how much money you're going to have to put in the cap X to go into some of these buildings to make it carbon neutral. It's incredible.
What about climate change? Outside of ESG framework.
Yeah, I mean, I think it's real, and I think it's a challenge for all of us. But here's something: if you look at Toronto today, and as great as it is, think about Toronto in 30 years. If sea levels rise, if the planet gets warmer, you're an inland market, you're away from water, you're going to be protected. I think that's why you see some of these major capital sources from around the world wanting to come into this city and this country because of what we offer.
We've had the benefit of some global investors on this podcast, and global geopolitical stability is a major factor in their investment thesis. And of course, to your comment, Canada seems to have fairly stable.
And no hurricanes, no wars.
Personal opinion, yeah.
How does that play into? I mean, so you're plugged into money at a international or global level. So what's your view of money coming into Canada?
You're just going to see more and more. If you're not here already, you want to have a part of it. So it's something where we're a great beta bet. We don't have the huge upside that the U.S. might have. So when things are really rolling in the U.S., the returns outpace ours. At times like this, when the bottom can fall out in certain geographies like the U.S., we get caught naturally. We don't overborrow. We don't overbuild. We're much more predictable, careful, and safe at a time like this. And that's where, again, if you want to be in safe waters, Canada's great right now because you're going to preserve equity with a lot of upside. And you know what? We're not perfect. As a country, there's a lot of issues. So you look at some of our debt, some of our other kind of government-led issues. I'll take it. Like, it's a lot better than what a lot of other governments are dealing with right now. So all in all, I like Canada. And again, the sales stats prove it out that, down 2% in trading, it's unheard of.
So you mentioned that globally we're down 20, and Canada outperformed at just a 2% dip. Is there any compelling case for Canadian dollars to leave the country for other investment markets?
Yes, and that's all about diversifying. So you can't have all of your portfolio in one country or one asset class. So you're going to find that the Canadians keep pushing more money out. So the bigger you are, the more you need to diversify. So it's money around the world. So everybody's synchronized in this approach. And that's a big part of what we do and how we run the business, is making sure we understand who needs to do what, and we become the trusted channel to move that capital around the world.
We're almost out of time, Peter, and I'm sensitive that I'm sure you've got lots of obligations on a busy day like
meetings
today.
in Singapore and fun things like that.
We should just. I'd like your opinion on just the affordability challenges we're facing. I mean, one of the major themes this morning was just, industrial is going fine. Office isn't as bad as it looks. Retail is actually doing really well in comparison to what, some of the headlines would suggest. But affordability is currently seems like an unsolvable problem. What's your thoughts?
For everyone, you're feeling it. It doesn't matter what you're talking about, whether it's housing, office accommodation, industrial accommodation, whatever you're looking at, it's getting so expensive in the world. It doesn't help when you've got a soft Canadian dollar, because that's just another pinch. So as a Canadian, high taxes, weak dollar, it's sort of affecting everyone. But I think what we're going to see is that in time, as bonds come down, as this whole inflationary picture starts to drop, we're going to feel a little bit more normalized. But this is something where we need to come together. We need a business mindset from the governments. We need it in a collaborative way with private sector. We're all in this together. And it's got to be the win-win. You can't just create an outcome where business wins. This has to be something where we're all there to help. We're all there to have a great outcome. And that's why I think Canada's better, because we will do that.
I heard Benjamin Tall kind of, he's prone to just throw out ideas, and that's why he's so entertaining. He had just mentioned sort of federal government subsidizing development charges. Did that ever cross your mind?
It's coming. It's the cost to put these units up. If you look at the cost of a house, a condo, based on government cost and input,
it's like 28% or something of the all-in input, right?
It's incredible. We need to be more efficient. We got good governments. We need them to be more efficient, though, with just how the money gets spent. So this is something where, again, we're all in it together. We've got to have a great outcome. We've got to take care of everybody. But at the same time, we just have to be a little more efficient.
Are we out of time? Has Peter got places to be?
If we can we just do 2024? Where are we in a year from now?
We're sitting in this conference a year from now.
Yeah,
what would be talking about your $10 billion deal?
Yeah, what's the...
It's all looking like we're getting through this really tough period. I've never seen something where you go from 2019 was all out. It was a great year. Everybody was in sync. It was one of those years where you start going, maybe it's different this time, right? 2020 hits. We all know what happens. We kind of get through that. Then inflation hits. We're due for a period of time where it's a little bit more normal. So we're going to come through this. Bonds come down. Interest rates come down. We're going to have some predictability that we haven't had in a long time. I think you've got something where 2024 is going to be a good year, and then watch 2025 should be great. So it's just always up and down. It's always in cycle.
Did you hear that real estate's cyclical?
Yeah. Well, if I'm doing the math correctly, you would have started your career in 1990, which would be a very problematic year to.
Do you know what? All of our leaders today across all real estate, they all had that 1990s experience, which prepared you for protecting yourself, right? And not getting too far over your skis.
Absolutely. Well, that's what cleared out the whole chance. So I actually started, I was at CB for that period of time. I had 2 years before that in the industry. I started in the boom of boom times. And then I watched cars getting towed. I watched bankers taking down people. I watched developers going broke. It was one of those ones you never forget it. And it's great life lessons. So you live your life in a predictable way. And as you go through and you look at where we're at today, I just think we're nowhere near that. And the bankers also learned they don't want to take back all this real estate, right? Like it was such a problem to deal with it all, right? So I just think again, it's a partnership. The trust that you would have with your key borrowers, the way that we play an important role, and the trust again, it's just something where I think we will avoid any kind of major problems going forward because of all this.
Great. That's a wonderful closing remark. Thanks, Peter. I appreciate you taking the time to come on. Thanks to First National for powering the podcast, and of course, Inform on the Real Estate Forums for hosting us here at Real Capital.
I love what you do. I love how you do it. Thank you for having me.
Thanks for coming on.